Welcome back, everybody, to the Bitcoin Yield Podcast. This is episode 4. Been off to a great start with great guests, and we're continuing our kind of deep dive into Lightning this week. And I have probably the best person to talk to on this topic when it comes to Lightning and yield and understanding the network. So I have Jesse Shrader on the pod from Amboss Technologies. Jesse, welcome to Bitcoin Yield.
Thanks so much for the welcome, and glad to be talking with people about Lightning and yield opportunities, payments possibilities, anything you want to chat about.
This is going to be a good one. I want people listening to this you could think of this as a masterclass in understanding the intersection of Lightning and how it works and earning yield on it as a network. And so the reason I love Lightning, and I've been doing deep dive first, is because as we're diving into this Bitcoin yield project and researching the best yield opportunities, Lightning is the safest way to earn yield on your Bitcoin, like full stop. And so through that, could you give us just a brief primer for people who don't understand what is the Lightning Network and kind of high level, how does it work?
Yeah. Lightning is Bitcoin's scaling payment system. It allows you to use Bitcoin and in the future, other assets, and actually be able to pay invoices and have instant settlement. And it's a completely credit and debt-free system. So you have these engagements with other, peers on the network that you don't need to trust, but you create payment channels, and that's where payments can flow across new pathways and have instant settlement. I think it's a really important piece to just highlight how important and how different that is from other payment systems that normally use credit and debt. This also works anywhere on the globe, and so you can have very cheap, fast payments, including AI payments, because Lightning is very good at microtransactions. So this is a very important piece, and we're also seeing right now early adoption in the creator economy. So people getting, micro tips, or sometimes they're called zaps, where a podcast or a streamer of sorts would, put up a stream, and then they could start streaming money to that content creator.
Yep. Very cool. And the credit debit side, that's more in the fiat world. Does that also carry on to what we currently think of as, global state blockchains, or does not carry over there?
In some respects, it depends on the implementation. I think when I'm talking about credit and debt, for the most part, it's all about traditional payment processors, the Visa, MasterCard, American Express. But when it comes to blockchain payments, what we see is a lot of the companies are kind of centralizing this and just have it on their database. So if you want to process a payment, it's actually not moving on chain. It's just a database update in the exchange, which means for the entire time that you have access to this, it's really the exchange that is holding your funds, which, we've seen exchange hacks in the past. Mt. Gox is probably one of the biggest examples. And overall, that type of scaling, where really just moving to the exchange's database, is a risky endeavor. But for Lightning, you can really reduce the risk exposure because you're keeping it in self-custody the entire time. So you always have access to the keys, and you can exit whenever you want without having to trust a third party.
Yep. Okay. Good to know. And then let's double click on that self-custody piece. That's a very important part, especially for institutions. We need to know, who's giving these keys, or if I'm not, I have, a legal contract with some kind of custodian. Those are kind of the two ways. So why is it that Lightning is seen as so safe? How is it constructed that people can put their BTC to work and know that it's not going to get rugged?
Yeah. So what's really important, and I'm glad you mentioned the custodian piece. So in our product construction here, it's really the focus is on self-custody. So you have the 24-word seed phrase that would allow you to exit this at any time. And what makes that possible in Lightning is that for every state of this payment channel that you have with another party, you always have a signed transaction that can be broadcast to the Bitcoin network at any moment. And that's your exit plan. So even if that other person isn't online anymore, you still have a signed recent transaction from them that is kind of your exit ticket.
Okay, perfect. So let's jump straight into yield then. And there's a couple broad categories of how people earn yield on Lightning, and we're going to separate this from all the stuff that's happening on other blockchains. So that's a different day. But there's I think two main ways, and maybe you can tell me if there's more, that we look at yield today on Lightning. One is routing payments, and two is leasing your liquidity. So first, are those accurate, and is there a third one? But then say a bit about each one.
Yeah, I think for each of those, as far as things today, those are like the two main sources. It is payment routing and leasing liquidity. So payment routing on that's where it's using existing infrastructure. You've deployed Bitcoin on the Lightning Network, and you also have liquidity from other participants in the Lightning Network, which means that you have to have the ability to receive and then send a payment. And that's really what forwarding is. I think a lot of people have in their mind that they can indiscriminately deploy Bitcoin over the Lightning Network and somehow be able to earn payment routing fees. But that's not the case. It would be like setting up a kitchen and filling all the counter space with all of your equipment. Well, how much food can you process through the kitchen is going to be zero because you have no swap space. You've taken up all the counter space to actually do any of the processing. So you can't receive anything more. And then, of course, you would be able to send, but receiving is critical if you want to actually route a payment. So that's payment routing kind of in a nutshell. At the protocol level, this is how that operates. And in the protocol, you can set your fees for how much are you going to charge to send a payment where someone else is actually kind of initiating this, where you're forwarding it. It's kind of like saying, I've created this road here on this payment network, and I'll charge you a toll every time that you want to use this payment network. And I can charge you, maybe just for one-time use, or I could charge you based on the size of the payment that you're actually forwarding through my payment channel.
Okay, well, I guess, should we continue on routing for a sec, or should we give a high level of liquidity leasing, do you think?
Yeah, let me know if you have more questions about the payment routing.
I actually have a lot, so let's continue down this. Let's excavate this quite a bit, and then we can jump into the other way you earn yield, so people hold on to your seats. Yeah, so I think this is where people can hear that, and it sounds like, okay, I get it. Where it gets interesting is that, and I want to make sure I understand this, it's kind of like a toll road. So you're going from A to B, and you can charge a toll in the middle. And like you said, you can charge a low enough fee to attract people, or maybe it's a size of payment. How does competition get into this? So I imagine if you have many well-connected nodes, you now have a toll marketplace, if you will, that people can choose. So how does that work at a high level? And how do people optimize to be the toll road that is chosen?
This is a big challenge of the Lightning Network, is you don't have a lot of knowledge about where payments originated because all of the payments are private, which makes it a very attractive payment system. And really all you know about where a payment is coming from or going to, that's all, outside your scope of knowledge, because each payment is actually onion routed, similar to, the Tor network, which is kind of encrypting internet traffic. So that same technology is applied on the payments space. So the challenge here is identifying what are the sources of payments and what are the destinations. And you can be a bit intuitive about this. Like, who is going to be sending payments? Well, there could be a payroll company or someone that is paying Bitcoin rewards. That would be a known or an intuitive source of payments. Also, an exchange that may be processing withdrawals, they could also be a source. Now, you could also be intuitive about who are the destinations. Well, the humble sat stackers, the people that are buying Bitcoin, those are going to be destinations of payments for the most part. Additionally, destinations may be pure merchants, so a coffee shop, for example. And then there's some that are in between that may have traffic that is, some sourceness and some syncness, or that kind of destination quality. So a wallet, for example, may be receiving payments as well as sending them. So the question is for the person seeking yield is how do you allocate your Bitcoin so that you can be between the source and the destination, that you have the ability to receive from the source and you have the ability to send to the destination, and you're the cheapest route that's available. So in this entire landscape, there's many routes to get from point A to point B, but are you the cheapest way to get there?
I see. Okay, I want to rehash some of this to make sure I understand it and the listener. Use some words like onion routing. The way I'm thinking about this is when you're talking about who's going to be involved in this destination and the source, it's something like, you could tell that people are going to go to work in the morning if you're going from like rural area to big city. So you can go A to B, and that there's going to be traffic. But you can't in a perfect world, like with GPS, you could say, okay, I'm watching traffic data. We're going to route around it. Because of onion routing, you don't have perfect traffic data with the way the network is constructed. So you kind of can get some idea of where people are going to be at a given time, but specifics of what road they're going to veer off to, you can't know. Is that kind of a way to think about onion routing and like putting yourself in the flow of funds, as you mentioned?
That's a great way to analogize this. There's really no satellites to see everything that's happening in the Lightning Network because payments are private by default. And so Amboss has a role to play in this because, we have information from several nodes in the Lightning Network. So we get some clues about some of the traffic, but it's impossible to know all of the traffic that's happening everywhere in the Lightning Network.
On it. And so the best way we can do it today, one is use Amboss, because you guys have the data as best as you can work with it. But you're really trying to figure out, okay, Cash App has a node, and they're doing a certain amount of flow back and forth. So you want to be connected to them if you want to get people either bridging in or bridging out. And likewise for Coinbase, you can kind of hopefully identify where Coinbase's node is or Lightspark's node is. And as long as you're connected to them, you've now opened up that toll to this potentially big market.
Yeah, potentially. So for one thing about like how networks grow, you may actually want to connect to someone that is very well connected, but then connect them outward to someone that may be like forgotten about for the most part, because that kind of gives you alpha to say, hey, this node has kind of been forgotten about, and maybe there is payments here, and there might not be very much competition.
I see. Okay, so it definitely sounds like a lot of trying to understand this is a black box. I think I've heard some of this, like people wish that you could like ping parts of the network, but because it's so private, you actually can't go and like scan the dark edges. You have to kind of wait for a payment to go through. Is that correct?
Yeah, it's almost like fishing in a murky stream. You don't exactly know how many fish are there, but you can just deploy your bait and wait. That's like one way to look at it. The way that we're doing things at Amboss is actually running simulations to see, well, if I can allocate Bitcoin to make more reliable payments, well, then I would be well positioned to route any payments that go through, and overall help the network.
Got it. Okay. And then before we move on to liquidity leasing, assuming you're running a well-optimized node, what is the kind of expected APY for just routing payments right now?
So for routing payments, this is a clear derivative of payment activity happening on the Bitcoin Lightning Network. And also a question of, are you in the right position to do that? So what we see today is, relatively low volumes, I think, to the attainable market. And I would expect less than 1% APY to come out of payment routing in general. I think some really expert operators may be able to exceed that. But I think at this early stage of Lightning payments adoption, I think we should expect much lower.
Got it. And as you mentioned, this is one of those things where as we move from store value to medium of exchange, that yield number is going to potentially massively increase, or you see supply come online to fulfill that demand, because no one right now is really spending their Bitcoin. They're all holding and waiting for it to appreciate, but eventually as we start spending it, that yield number goes up with it.
Exactly. Additionally, we're we're operating in a network that is, really not positioned, or it's not serving taproot assets right now. It's not serving stable coins. But that is around the corner, where this is part of the protocol now that it could also serve stable coins. So from the payment side, that would mean that you could begin a payment in whichever currency you like, and it would end in a currency of whatever the currency people want to receive in. So that future positioning would still leverage all of the existing payments infrastructure. And so I'm particularly bullish on payment routing ability when taproot assets and stable coins are on the Lightning Network in production in many wallet implementations.
Yep. Yeah, I totally agree. For people that haven't seen taproot assets, as he mentioned, like you could spend in stable coins, it gets converted into sats along the Lightning Network, and then at the end, what they call an edge node, it can convert back into whatever stable currency you want. So you can leverage all your current infra to gain yield. All the optimization is the same. Very interesting. Then let's jump into the next big yield opportunity, which is putting your Bitcoin to work to help people manage their channels and have inbound and outbound liquidity, which is called liquidity leasing. Say more on that.
Yeah. So liquidity leasing happens at the application layer. And this is where instead of using existing channels, it's all about creating a new channel. So it's leveraging my existing connections that I have and saying, hey, I have some additional Bitcoin that I'm willing to deploy, and I'll deploy it to you so that you can receive payments reliably. So, and that really functions as a way to bootstrap new merchants or new entrants to the Lightning Network. And, when we productize this, if we want to get a node set up so that it can start leasing and routing payments, well, the first thing that we need to do is actually lease some liquidity ourselves. So we would be the recipient of a liquidity lease and have to pay for it. That helps bootstrap this node so that it can be in a good position to receive payments and send payments and be able to earn some fees on those routing payments or future liquidity leasing.
Yeah. And I think the first natural question here is how do people know that their BTC is safe? So I'm putting up my BTC into a channel. How do I know it's not just going into the ether and that, when the contract is up, I'm going to get my BTC back?
So the way this actually works is we're operating at the application layer, like I mentioned, and we operate a marketplace. And really, this is just about saying, how much Bitcoin do I have that I'm willing to allocate in Lightning channels? And what prices am I going to charge for that? So from there, Amboss by default just notifies the seller saying, hey, someone wants to buy from you. Go ahead and open a Lightning channel. And that happens outside of Amboss's control. Really, we're just trying to facilitate and organize the market. So what you can do to do a liquidity lease, it starts with offering up liquidity and then saying, once you get notified someone wants to buy, create that channel. And this is the same payment protocol rules apply. So you always have the ability to exit. So you don't need to trust anyone else in this. But once you create that payment channel, then it's publicly visible and you can prove to Amboss that you fulfilled that order. And from there, Amboss will be able to pay you for opening this channel. And you agree to keep that channel open for a specified period of time, 60 days on average. And once that's in place, then you can earn not just from the liquidity leasing fee that you've earned, but also for the payment routing. So there's the ability for this to stack.
Oh, okay. I wasn't aware of that. So if you're putting liquidity into a channel, I guess by definition, does your node now potentially route through those are connected? How do you say more on that when it comes to the fee part of that?
Yeah. So as part of the liquidity lease agreement, you're actually specifying not only how much you're going to charge for opening this channel and keeping it open for a duration, but you can also make promises about what types of fees you'll charge to route a payment through that infrastructure. And that matters to whoever's buying from it. So say, for example, you're selling coffees, and someone is coming to your store, and whenever they're going to pay for the coffee, well, it's really the consumer that is paying for this routing to happen, for that payment to arrive at your store. And, some merchants would really want to keep that cost low so that every consumer is not paying a whole bunch for just getting their payment to the merchant. So the merchant may decide, hey, I really want low routing fees. And they could lease a channel specifically that has promises that are low to say, they're not going to charge a whole lot on routing fees.
Got it. Okay, that's super interesting. And then again, on the yield side, what is the expected return for doing liquidity leasing?
Yeah, so looking historically, what we see for the liquidity leases themselves is 1% to 4% APY. And so, of course, for whatever you can lease, you're earning that, elevated amount compared to payment routing. So the real focus should be on, how can I find more people to purchase liquidity from me? Or, who is going to be leasing liquidity? So it really incentivizes the adoption of Lightning Network as a payment system. So the more people that we onboard, the more people that are receiving payments, they will need to continue to lease liquidity to keep up their operations.
Well said. Yeah, and this goes back to the overall, the network is much more demand constrained than supply constrained. And so anything we can do to push the medium of exchange portion of using your BTC or taproot assets and stables makes all of this flywheel just fly faster and faster and faster.
Exactly.
Yep. Okay, then this has been a great breakdown and very succinct. So I think we're jamming. The last thing I want to touch on is, okay, people are bought in. They want to put some BTC to work. Your first, you can go to Amboss Rails, and we should touch on that. But first, if you want to do it all yourself, you're going to be running a Lightning node and using all this involved with that. So how difficult is it to run a well-optimized Lightning node yourself in 2025?
I think it is doable. You will learn a lot in the process, but for the institutions out there, it's not something that they would want to take on themselves. I think there's a lot of kind of acquired knowledge in the Bitcoiner space on actually how to use the different tools that are available to optimize your own Lightning node. But you can set this up. I mean, this is maybe $300 worth of hardware at the lowest level. You might want to scale up a bit and maybe use a cloud-hosted solution like Voltage, for example. And overall, then you can get set up and keep your funds in self-custody. From there, if you're going to do this yourself, you'll be interacting directly with our liquidity marketplace, which is called Magma. And so that's where you can actually manually start doing the liquidity leasing. But what we see is, if you want to do this in an automated way, we've got, a separate product that can actually serve that for under Rails.
Yep. And then when it comes to keeping your node well optimized, because like part of it's liquidity, you have channel management, so making sure the inbound and outbound is properly oriented towards the flow of funds you're currently seeing. How hands-on is that process versus like being a set it and forget it yield option?
You can be as involved or uninvolved as you want. And I might actually recommend that people take a more hands-off approach to running a Lightning node. It's really about being intuitive about who's sending payments, who's receiving payments, and allocating your Bitcoin appropriately. Also, just making sure that you have enough inbound in order to receive a payment and forward it. Otherwise, you just won't be able to route a payment.
Got it. So is this... Sorry, please continue.
Yeah. And then if you know of anyone that is actually, planning to receive payments, well, you could be the liquidity provider for them. So it's really about, bootstrapping the network growth. And so really that's how you would just completely on your own succeed as a Lightning node operator and start earning.
Got it. The thing I was going to ask is that as you were saying that about like maybe be a little more excited to forget it, is it makes me think of Warren Buffett's thing of like you can't beat the S&P. I'll buy the S&P and you do your fancy trading stuff and we'll see who wins. And we know how that ended. It seems like something like that where like there's so many knobs you could potentially play with and channels you can connect to that you could drive yourself crazy being too optimized that you actually shoot yourself in the foot in the yield perspective. Is that kind of what it's like?
Yeah, I'll share a very clear mistake that people make is that they have this idea in their head that they want to get all of their channels balanced. So 50-50 local balance and remote balance in all of their channels. Well, that's a fool's errand because in order to achieve that, you have to essentially do self-payments. And so you'll be sending out of one channel, receiving in another channel. And guess what the other person is going to do? Well, they want to get their channels balanced also. So they're just going to reverse the payment that you just made. So it will be completely self-defeating and you'll pay more in fees than you can expect to earn.
Got it. Okay. Yeah. And, anytime you go to like a stadium to buy something, if you watch the flow of funds, it's very one directional. People are buying a bunch of stuff and people are just receiving. So it's like that. Trying to make it 50-50 and give money back, that serves nobody. That's a stupid use case in that regard. So you can optimize yourself into oblivion. That's good to know. So that's node running and some of the nuances of it. And then you guys have Amboss Rails, which you announced a few months ago at Bitcoin 2025. And this makes it basically super easy while still in self-custody to do most of this stuff. Yeah, say more on that.
Exactly. We noticed that people were really struggling to run their own Lightning node. So what we did is we set up a product where with just a few limited permissions that Amboss can essentially automate this product for you. You don't have to learn really anything about the Lightning Network itself. It's really, you bring the capital and you take it into self-custody. So what we do is we're going to create a Lightning node for you, and you'll, as the customer, be the only one that has access to the seed phrase. From there, you delegate limited permissions to Amboss to say, I want you to open channels, I want you to close channels, I want you to set my routing fees, and be able to receive Lightning. Those permissions don't include the ability to send payments. Amboss cannot withdraw from this system. We don't have the permissions to do so. And from there, we're applying our machine learning process to actually allocate your Bitcoin, set your routing fees according to market rates, and try and get you the highest yield as possible. We're also going to charge you to actually get enough liquidity to your node and make it attractive so that you can route payments and you can lease liquidity in the future.
Very cool. Very cool. All right. I don't have any more questions. We ran through all of this. I think this has been a fantastic, succinct masterclass in understanding the Lightning Network and gaining yield on it. Anything that we missed or closing thoughts?
Yeah, I think when people are thinking about this strategy to like earn Bitcoin from routing payments, really they should be first focus on a way to like reduce their payment processing costs, because you could think of your business as this potential Bitcoin generating facility. You've got your existing business lines and you're paying for payments right now. So you're going to be paying Visa and MasterCard to do, 3%. But what if you switched over to Lightning payments and you were potentially in the future be able to receive a stable coin and start integrating this into your business operations? That puts you in a phenomenal position to actually build out this economy, because once you have those payment volumes, then you really open up the possibility to earn much more from the Lightning Network payment system. So that's where you start to make strategic moves to start allocating capital, but only after you convert your payments over to using the Lightning Network.
Perfect. Yeah. And as maybe double click on it for people, it's easy to come in and be like, I have BTC, I want to supply it. Where's my yield, bro? And that's a thing. You could try that. But if we're trying to be proactive in, pushing a Bitcoin standard and even just getting yield on it, it's something like you just said, which is that if you're a merchant, you want to be on Lightning Standard, and there's a big need for the payment demand side. But even if you're a proactive entrepreneur or, you just well connected, partnerships with those kind of people can get you in the flow of funds in a way that most people aren't focusing on. And you're solving the biggest need currently in the Lightning Network, but also Bitcoin moving from SOV to MOE.
Yeah. To really just be very clear about what people need to do to start accepting Lightning payments. It really is create a Lightning node. That could be through Voltage. Spin up a BTC Pay server, which hooks right into your e-commerce site, and then get liquidity from our liquidity marketplace, which is called Magma. Those are the three pieces that you need to start converting all of your existing business revenue into this Bitcoin generating machine and serve Bitcoiners, contribute to the circular economy that is on Bitcoin, and then put yourself in a good position to start earning from payments.
Excellent. Excellent. Well, close us out with, if people want to learn more about Amboss and what you guys are working on, what's the best place to connect?
I think starting off at amboss.tech, our website, you can see all the products that we have, and that goes from, Lightning Network exploration, some of the research, the blog posts that we've put out, liquidity markets, as well as all the compliance activities that, your business may need to integrate Lightning payments.
Perfect. And we'll have links in the description. Man, Jesse, thank you for this one. I think I cover Lightning quite a bit, and I'm very bullish on the network. And I think this might be the most succinct, on the nose podcast in the world for this topic of Lightning and yield. Thank you so much for coming on and giving this masterclass.
It was a pleasure, Jacob. Thanks so much.